This is the video lecture on Social Security. In an earlier video, we talked about various items of legislation that have an effect on the payroll profession. And one of those items of legislation was called the Federal Insurance Contributions Act. And we usually abbreviate that as FICA, F-I-C-A. Now, this is a very important piece of legislation to all payroll professionals, because this is going to have an effect on how we calculate our deductions. And in the previous video, we talked about actually calculating gross pay, and you even had a demo problem and a homework example and assignment in which you calculated gross pay. Well, once you get the gross pay, then you have to start making all the various deductions. So that's what we're going to focus on in this video, the Social Security and healthcare insurance deductions. Now, if we're going to have Social Security deductions, one of the first things that comes up is, what is my basis for that? What are my taxable wages? What should I include? Because if I'm going to multiply that by a percentage, I want to make sure I'm starting out with the right wages. So it's fairly obvious, but in some cases there are some additional things that have to be included. So first of all, any money received by employees. So it could be hourly wages, it could be a salary, it could be anything like that. Any type of compensation definitely would be considered taxable wages. And that's fairly obvious. Then you look at commissions and bonuses. We've talked about commissions, and in fact, we even calculated a commission in the last lecture. Those two are considered to be taxable wages. But one that might actually surprise you would be the cash value of lodging and meals. And those are lodging and meals that are provided by the employer. So that also is included in that taxable wage base. What about tips? Well, according to the FICA laws, any tips received of $20 or more, those have to be included in wages. So we have to always document the number of tips that are received, so that can also be included in that taxable base. But at the same time, of all the things that have to be included, there are also certain things that are exempt. What could we leave out of that taxable base? Well, first of all, the first 6 months of sick pay, that can be left out. That's exempt from Social Security taxes. Make-up pay for military duty, that's exempt. And also, any meals and lodging that were provided for the convenience of the employer. Now think about that. Sometimes an employer will provide meals at the workplace or provide lodging arrangements, and it's actually for the convenience of the employer, so that the employee will be closer to the workplace for some specific reason. So if the meals and lodging are provided for those reasons, those actually are exempt. So these things would be left out of the taxable base. Now, the actual Social Security rates, we're actually going to have two different rates that will have to be calculated and deducted. We're going to have the OASDI as well as the HI. So we're going to take a look at each one of these individually. Now, the OASDI component, that actually stands for Old Age, Survivors, and Disability Insurance Benefits. And OASDI is typically what people are referring to when they talk about Social Security. What rate are we going to use? Well, these rates do change from time to time, but what we're going to use are the most current rates. And right now, it is 6.2%, but there is a cap, and the cap is $106,800. So we're only going to tax the earnings of the employee up to this level. Once the earnings exceed that level, then we stop and we don't do any further deduction for OASDI taxes. And in addition to the portion that we withhold from the employee, we as the employer will turn around and match that contribution. Then we have the HI tax. The HI tax stands for hospital insurance, or what most people refer to as Medicaid. The tax rate here is 1.45%. And notice there's no mention of a limit, and that's because there is none. 100% of all earnings are going to be taxed under HI. So it doesn't matter how much the person made, regardless of the income level, we will always withhold that percentage. And again, the employer will match dollar for dollar everything that the employee contributed. Now, another problem with these types of taxes has to do with people who are self-employed. You'll notice that on both the OASDI and the HI tax rates, on both of those, it was the employee contributing as well as the employer matching. Well, what if you're self-employed? You don't have anyone to match. So as a result, self-employed individuals have to actually double up on the rates. So their OASDI rate is actually 12.4. But again, only on the first 106,800, and on HI they have to double up to 2.9%. So it's always good to pay close attention in any examples that we have, because if we do have a self-employed person, we have to remember to double that rate. Now in this example, Social Security example, we have an employee. They earn a monthly salary of $9,800. Question is, how much FICA tax must be withheld? And that includes both OASDI and HI. Well, before we calculate that, the first thing we want to do is double check and make sure that we're not going above the cap. Remember, you don't ever take the OASDI taxes above that cap. So in this case, they're wanting to know this for the month of December. So the first thing I want to do is take a look at what this person has made year to date. If they make $9,800 a month, and we're about to calculate this for December, that means they've already been paid for 11 months. Well, that adds up to $107,800. That exceeds the cap, which is actually $106,800. So in this case, there will be no OASDI tax withheld because we've already met the cap. But remember, it doesn't matter on HI, there is no cap. So 9,800, 1.45%, we will have $142.10 withheld for HI. And notice I'm using decimal equivalent. The decimal equivalent of 1.45% is 0.0145.